It's wonderful to see such a bustling crowd here at the conference. I'm Nick Harding. I'm one of the founders and the CEO at LendingWorks. We lend money to consumer borrowers. Those consumer borrowers are usually buying a car, making home improvements, or paying off their credit card. We have two different types of lenders on our platform. We have our consumer lenders, our retail lenders, and we are the first platform, I believe globally, to have offered protection for our consumer lenders, which includes insurance that we have taken against default risk. And so that means that our consumer lenders are better protected than some platforms. We also have institutional lenders lending on the platform, and indeed they are helping us fuel some of our growth, and we welcome additional institutional lenders to our platform in the coming years. So my peers have talked about a couple of different topics. JDev mentioned an outsider looking in. Ridian, the wily second mover in the consumer space, has talked about empowerment. So as the newest of the three platforms, I would like to talk about the future. Many evangelists in our industry will have you believe that the banks are doomed and they'll be going out of business in the coming years as peer-to-peer lenders and other alternative finance companies flourish. I don't believe this concept in any way, shape, or form, and I believe that the banks have weathered many storms in the past, and there are other factors that mean that the banks will be part of the outlook in the future. However, during my presentation today, I would really like to make an analogy. So rather than the banks kicking the bucket, I wonder if the banks might go on to play the part of the mobile phone networks over the last 20 years. So if Barclays are taking the part of Vodafone, then of course the FCA will be taking the part of Ofcom. And the likenesses don't stop there. They both have creaky old infrastructure, and of course both of these industries have seen their share prices reach great highs and then plummet in the last 20 years. However, of course, being a Vodafone isn't necessarily a bad thing. There are plenty of banks out there that would probably quite relish the stable nature that Vodafone has seen over the last 10 years or so. However, their share price has barely moved since 2002, when it recovered slightly after the huge crash. Their Trustpilot score is rather amusing. It's about 0.1%, which, if anyone who knows Trustpilot, is very, very low. So that says to me that their consumers aren't necessarily enjoying the service that they offer, and their outlook is far from exciting. So to continue this analogy, who were the winners from the mobile phone story? Of course, we have the huge companies such as Apple, Google, and Facebook, which are three of the most successful companies of the past 30 years. And most importantly, why did these companies do well? Well, from my analysis, I believe that these companies did well partly because they have a very strong vision. Facebook set its vision to connect the world. You don't get a much more strong vision than that. They all have simplicity at their heart. A great comparison here is Sony has circa 1,000 product lines available. Apple has circa 10, and of course, we all know who the winner of that story was. And the third point is they all deliver an incredibly high-quality, reliable, and trusted service. And this is something I'm going to come on to later in a second. So what can the LendingWorks team and all of the other peer-to-peer lenders learn from these companies and learn from what's happened in that analogy within the mobile phone industry? At LendingWorks, we focus on three main values to deliver to our customers. The first, and I think the most important, is quality. Our product, the product that our consumer lenders and our institutional lenders come to our platform to buy, is a personal loan. So they are going out and buying personal loans through our platform. Therefore, the quality must always start with the loans that we're originating. And to JDev's point around credit performance and default rates, we think that originating high-quality personal loans is absolutely imperative. And I believe that our default rates are amongst the market-leading or market-leading low default rates. And so we believe we're doing a good job of credit risk. I thought it was interesting from a conversation I had with Giles probably a year ago, that actually in Zopa's first year, they had virtually zero credit default risk. And LendingWorks is setting the way in our industry, in our section of the industry, with similarly low interest default rates. So quality must go on and be recognized in other areas of the business as well. Of course, the website, the tools, the platform that our customers use. I believe the customer service, which again, Jaydev mentioned, which I think is absolutely imperative to us disrupting the financial services industry. As we've talked about, there are many companies out there delivering terrible customer service, whereas the peer-to-peer lending industry as a whole is delivering a great customer service. We would be delighted to be recognized in some awards earlier this year in that area too. So the next thing that we have focused on is simplicity. We believe that simple models will prosper. eBay, about 10 years ago, launched a buy it now service on their auction system. At that time, about 20% of users used the buy it now facility, whereas today there's 80% of users are using the buy it now facility. So therefore, the auction-based model, that's kind of going away. So slightly contrary to Ridian's point, we believe in a simple model, which does have a pricing committee, but it offers consumers the ability to come to LendingWorks and not have to play a financial market, not have to log into their account every day. And it means that our consumers have a platform that they can set up their account within 5 minutes. It's fully mobile and tablet friendly. And our marketing and language is equally as simplistic. The final point that we focus on is fairness. I've been fascinated throughout the last 20 years by the fair trade movement and the idea of connecting buyer and seller together with as few people taking a slice along the way as possible. As a computer science graduate, I've also been fascinated by the power of technology to connect people together in ways previously not possible. Peer-to-peer lending is the perfect mechanism for bringing the fair trade movement to financial services, and it's one of our core values at LendingWorks. The lender, the borrower, and LendingWorks all must make a fair transaction, and so LendingWorks must make a profit. The lenders must be paid a fair amount for the credit risk they are taking, and our borrowers must receive the APRs that's appropriate for their circumstances. So just to recap, at LendingWorks, we focus on quality, simplicity, and to act fairly, and we urge all peer-to-peer lenders and the alternative finance industry to do the same. Thanks very much.